Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Coca-Cola earnings you're going to like this morning because I was right about Coca-Cola, why we could buy this stock. It was going up, great earnings, FIFA, and I was right about the ransomware deal that would get resolved quicker than you thought and would not be an implication on the stock. I was right. However, I was right to sell it where I sold it. I sold it with more profit than the CEO because now people are starting to take profit. It's going to $92. We've in fact increased our price target. But be careful now because the market is selling off. Everything will come down. Coca-Cola is the piggy bank. And the question is, where does the money go next? It's not about being in the stock at the top. It's about identifying a stock that's going up and undervalued when buying it when nobody else is. We've done that consistently for 4 years. The next thing to do is to look for the next big thing. I told you the government was buying SpaceX. The government have been buying SpaceX. I told you before the government knew they were buying SpaceX. What do I mean? Well, today I'm going to show you now for the first time who has been buying SpaceX from the government. I told you they was. I told you they did. And they did. Get ready for where the money goes next. You might have guessed we're going to beat the market again. We're going to outperform the market again. It doesn't come before pain. It doesn't come before criticism. It doesn't come before everyone says you're stupid and wrong. But I was right about Coca-Cola. I was right about the price hikes, inflation, rate hikes, when we'd get rate hikes. I've been right for 4 years. I've beaten the market consistently. I was right about Coca-Cola, and I'm going to be right about SpaceX right after this. Tap the like button. If you're watching later, skip forward. The earnings is in 25 minutes. We're now going to get straight into the meat and the bones of it. Put the kettle on, get ready. If you are an investor and you want to share this out to the world on a Coca-Cola forum, on your trading 212s or your eToros, your Weebles, wherever you look for information, share this. It's a bullish story. It's a big story on Coca-Cola followed by SpaceX that nobody saw coming except I did when nobody wanted to even look. Get ready for an explosive morning of making money. Now the profit is being taken once again. Let's get ready for a big show. It's Coca-Cola beats SpaceX gets bought by the government. And I'll show you everything right after this. Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time now for Coca-Cola earnings, followed by an even bigger story of SpaceX. I did tell you that Coca-Cola was a great business, a business to buy and own. You could never sell this if you wanted to. However, that's not how I invest. I'm a high-frequency trader. I take profits and I move on to the next thing. I always come back, though, when it's the right time. Coca-Cola, I reported to you, was oversold due to the ransomware deal before anyone even spoke about it. It wasn't even on social media or TV or anywhere. I even gave you the names of the people behind the ransomware and shared that with you in my private spaces on Discord and on YouTube Electrum. I told you it was an overreaction and it would get a good beat from FIFA, the deal with Crocs, and the upcoming IPO in India. However, I took profit just before here. Around about 84, I sold it all again. Now, you may remember, if you were paying attention, the CEO, James Quincy, did the same thing. Many of the directors, in fact, sold before me. It's not about being in the stock when it runs up. It's being in the stock when it's oversold and down. And the real money does that over and over again. Today, people get excited because we got a beat. No surprise. The beat was as expected. We knew we'd get a beat, and we did. And the stock has run up. Well, what comes next? Well, we all know what comes next. What comes next is selling. People sell this asset now because it's the piggy bank. Where are they going to go? Of course, they're going to go into Coca-Cola. Sorry, SpaceX. And why are they going to go into SpaceX? Well, I told you very confidently that the government was buying SpaceX. Well, this morning, I'm going to be able to prove to you for the very first time that it, in fact, has happened. In a few moments' time after this, we're unable to schedule. Oops-a-daisy. I'm just trying to get something out. Whoops. I'm just trying to get out the Coca-Cola information and SpaceX because it is breaking news and I want to be delivering it to you while it's useful to you. So SpaceX will come next right after this earnings this morning. Now, why are we covering the earnings? We're going to cover the earnings because we're going to learn more about the business. This is how I knew in the first place it was a good business to own and why I made 100. What's going on here? We're unable to schedule because you've oh bloody hell, I know why. Oh right, doesn't matter. Ignore me, I'm talking to myself. I can't post that many clips. All right, okay, change that. Right, so we're going to cover the earnings because we want to learn about the business for the next phase of investing. When I buy, I don't guess, I listen to earnings calls, I read balance sheets. It's what it's all about. So today, we learn what comes next. Those that understand are already taking profits. You can see it's going to 92 and 106 next year. Should you buy it now? Well, if you just want to buy it and then lose your money for a while, why not? But I don't want to lose money. You might go, well, yeah, but aren't you down $100,000? No, I'm down $125,000 currently in SpaceX. But have I sold for a loss? No. Am I buying when everyone's selling? Yes. Is it contrarian? Is it difficult? Do people laugh at you? Well, 0.0001 do. The rest go, Martyn knows what's coming next. I do. And this morning, I'll prove it to you. About a week ago, I reported the government were buying SpaceX. I've got some good friends. It's not inside information. It's just information that you don't read. If you sit around reading social media and making silly videos and stuff like that, you don't read it. You've no idea what you're talking about. You're basically a waste of space. And we get so many critics and buffoons and trolls, whatever. It's very small. It's less than 0.001 actually of our audience. We've got a very educated audience now. I'm very, very proud of that fact. But nevertheless, this is what goes on. Social media is suggesting that SpaceX is going to $50. The people that are saying that are idiots, homegrown amateur investors who have nothing better to do. And they've got AI, which they've trained on their own sentiment, which tells them what they want to hear. And it's complete rubbish. The government have been buying SpaceX for weeks, and they bought it after the IPO price. They paid more than me, a lot more than me. Are they wrong to buy? Of course not. SpaceX is, in the short term, going to 240, and we've got wild predictions as high as 800. That's a long way off, but certainly 240 to 400 can easily be achieved. The nonsense of going to 50 is rubbish. And after Coca-Cola's earnings, I'm going to share it all with you. I'm going to share with you the entire the story of who's been buying. Now the information is readily available and I can now share it with you. So I told you it was there, it's coming. But right now we're focused on Coca-Cola and we want to listen to Coca-Cola because we want to find out what comes next. Then when we take our profits from SpaceX, we know what we're buying, we know what the stock is worth, we can buy and we can do it all over again. This year alone, just in 1 year, from January to July, I have made $110,000 on Coca-Cola. Do I chase pumps? Do I buy it on days like this? No, I've sold it. I sold it higher than the CEO and the directors. Anyway, here is Coca-Cola. The earnings call starts in 12 minutes. I've got time for some Q&A. I'd like to say welcome back to Sensei. It was great to have Sensei on the show this morning. We've got Vaz coming back. The team are all firing on all cylinders. And I left a message for my team this morning, and I will leave the same message for all of you. Sometimes people get a bit down. They lose their way. They get a bit soft. They have things in life or they get content. The moment you are content in life, the moment, in fact, I'm just going to record this. I'm going to record this because this is useful to many people. I would like to leave a message here for everyone who needs a bit of a boost, a bit of a kick up the arse, a bit of a reminder what life is actually about. And it's not what you think. And I'm going to share with you my belief in the way I live my life every day. Have a roar in your head. Have an annoying, nagging roar. Roar like a fripping lion. I want to swear, but probably best not. Roar like a lion in your head. Have a sense of urgency because life is urgent. Life is very fleeting and very short. Life is not about getting the money you think you want to buy the things you think you need. It's about the journey on the route to those things. You look forward to retiring when you have money. Why? What are you going to do? Sod all. The things that you said you would do when you retired, I guarantee you will not do. If you've not spent your life doing them, you're not going to do them just because you turn 65. It's simply not the case. Or when I get older, I'm going to have time to go rowing a boat or skiing or playing golf. Did you ever play golf during your life? No. Well, why would you do it? Why would you do it when you're old and buggered and broken? You won't be. You won't. What life is about a journey, and have a nagging roar in your head of a sense of urgency. I feel it every day. People often talk about Elon Musk with a sense of urgency. He could retire, take his money, sit on the beach, and then he dies. You all die. We're all dying. The moment you're born, your body is decaying. Inside the womb, you're growing and expanding. When you leave the womb, you start to rot and die. Same in nature with a plant. The moment a flower blooms, it starts to die. It's already dying. If you feel life is comfortable and content and you have some stuff, now I've done it, you're already dead. Don't feel that way. Feel life with a sense of urgency. Not because you need to, because you have to. Because you have to keep pushing forward, because you feel the sense of progress and creation. Be creative, invent something, build something. No matter how rubbish or bad you think you are at something, do it anyway. Tell people to stuff it. It's your life. The moment you're dead, nobody will care about you within 5 minutes. Within 5 minutes, they'll be watching the news, moving on, having a laugh at a joke. Live your life. It's your life. Live with a sense of purpose and urgency. Every day, roar when you wake out of bed. Be a friggin' lion. Roar into life. Have a sense of urgency and create something. Every day, build something and hope that you never complete it. Hope that you never get to your journey, because when you get to your journey, what is there? Nothing. It's the journey. Everybody dreams about having something. Dream about having the ambition to want to work towards something and then live it every day. And that is how I'll become the first 1 billion channel in the world. When I get there, nothing happens. It's the journey though. It's the ambition and the drive to get there. And when you do anything in life like this, everybody knocks you down. Well, not everybody. Most people are good. But a lot of people will come out because the good people won't say anything. They'll just let you do it. The idiots will come out, the bad will come out in people, and they'll tell you you're stupid. They're the ones doing nothing with themselves. The ones that criticize you are always the ones at the bottom of the pile. So ask yourself, if you are in life criticizing people and knocking people and always going against people and laughing at people or whatever it is you do, look back at yourself and you'll notice that you're going nowhere and achieving nothing and you are at the bottom of the pile. Don't be that person. Be the person that innovates and grows. So anyway, there you go. Message to everyone today. Find a purpose and build and have a sense of urgency in your head to live it. And you can find happiness and creative explosion of life, like an explosion of fireworks everywhere. I want to thank everyone for sending love and prayers to Leah yesterday. She went to the hospital and everyone sent love and that. And it was very nice. Thank you very much indeed for all of that. Appreciate it a lot. And when I left the hospital yesterday, there were lots of patients in the waiting room waiting to start the process, as I'm sure you're all familiar with. And they were all sat there quite nervous and worried. And as I walked through the waiting room, I just turned back and I made a joke to everybody. And I said, guys, it's going to be great. We started where you are today and it's going to be great. You are an amazing country. What you have here in America is amazing. The checks that you're all getting today and the procedures you're all getting today is amazing. In England, you wait 3 years to have the checks you get every single year. The technology, the science, what's behind you is amazing. You are all going to do great. And everyone got excited. Everyone smiled. Everyone laughed. These are people waiting for the saddest news. I left the room feeling good. I dropped a bomb of love into a room. Don't be afraid. Don't be afraid to say something nice. Don't be afraid to compliment people. Don't be afraid to live. Make a difference. You can make a difference by making a joke, smiling. And you know what? People love it. People appreciate it. And those that don't, it's not on you. It's because they're not in a place to receive it. They're in a place where it's difficult for them, perhaps. That's okay. Let them be. But most people will boom and love it. So go through life dropping bombs everywhere, dropping bombs of love and excitement and passion and life, because that's your job. That is your job, to go through life and be relevant, make a difference. If you go through life dropping drips of poison and negativity, you're already killing yourself. Your life is already over. There's a few people who live like that. Don't be like that. Be a force for good, energy, positivity, creativity. If you don't like something, find a space that fills you with gratitude and excitement and thrive in that space. It's the same as we got 3 minutes to go before the earnings call. It's the same if I ever see anything I don't like. If there's anything I don't like or don't want, I walk away from it. I don't criticize it. I don't knock it. I let them be. Let them be their own world. If I go to a restaurant I don't like, I just say I don't like it. In fact, I will share with you in the last 3 minutes, I went to a massage, a masseuse the other day for what I hoped would be a stretching massage. And the guy was doing it was rubbish. Now, I didn't want to pay for it, but I didn't want to offend him either. I didn't want to sit all the way through it. So I said to him, hey, mate, this isn't quite working out, is it? With a smile. This isn't quite what I think I was expecting. I don't think perhaps it's what you were expecting. Is this your speciality? Not really. I said, I didn't think so. He said, I do massage, not really stretch. I said, okay, well, what I wanted today was stretch. No problem, mate. Let's leave it. Let's cancel this and let me go and try something else. He was happy. He didn't have an uncomfortable atmosphere. He didn't have a customer who was putting up with something he didn't really like. I told him. He left. He was okay. He had a smile. He learned something. He gained something. I didn't waste $70 blimmin' plus a tip on something I didn't want. And I booked. And I'm going there tonight. I'm going to Stretch Labs tonight down in Dallas. And I'm going to have a proper stretch with the right person. So I didn't waste any money, did I? And everybody wins. Say what's on your mind. The people that don't say what's on their mind are afraid to say it because they're not confident in themselves. Don't criticize people. If you criticize people, it's the weakness in you. Drop life bombs everywhere. Drop energy everywhere. Live. Be in control, be yourself, and roar through life with a sense of purpose and urgency. Get it done. Get it done and live. Fantastic. Let's get on with it. It is now time for the Coca-Cola earnings. We've got 1 minute to go. FM Woody, I disagree with you, Martyn. I have something you will never have. Enough. Okay, and I bet you any money you like, that is one of my trolls, so I'm going to ban that person from my channel. He's just created an account he's just spent 10 minutes creating a Gmail to create an account to come in and say stupid stuff. So well done. Congratulations. Another slug on the ground squashed. Right, let's get straight into the earnings for Coca-Cola. Here we go. Very exciting morning indeed. We said this company would win. It did. And now we're going to prove to you who's been buying SpaceX from the government. Right after this. So I'm going to mute this because we are seconds away. We don't want the audio to come through just yet. Let me just mute that. And let's get ready to rock and roll. Okay. I am listening in so you don't have to the music. Expect it to start in the next 30 seconds to a minute. Stand by. Okay. Right, stand by. I'm just listening to the audio in the background. You don't require it. It's just music. Here we go.
Earnings results conference call. Today's call is being recorded. If you have any objections, please disconnect at this time. All participants will be on listen-only mode until the formal question and answer portion of the call. I would like to remind everyone that the purpose of this conference is to talk with investors, and therefore, questions from the media will not be addressed. Media participants should contact Coca-Cola's Media Relations Department if they have any questions. I would now like to introduce Todd Biger, Vice President and Head of Investor Relations. Mr. Biger, you may now begin.
Good morning, and thank you for joining us. I'm here with Henrique Braun, our Chief Executive Officer, and John Murphy, our President and Chief Financial Officer. We've posted schedules under financial information in the investor section of our company website. These reconcile certain non-GAAP financial measures that may be referred to this morning to results as reported under generally accepted accounting principles. You can also find schedules in the same section of our website that provide an analysis of our gross and operating margins. This call may contain forward-looking statements, including statements concerning long-term earnings objectives, which should be considered in conjunction with cautionary statements contained in our earnings release and in the company's periodic SEC reports. Following the prepared remarks, we will take your questions. Please limit yourself to one question. Re-enter the queue to ask follow-ups. Now, I'll turn the call over to Henrique.
Thanks, Todd, and good morning, everyone. We've had a strong first half of the year. Our results reinforce our three beliefs. We operate in a great industry. Our beverages are well loved by consumers, and the strength of our system is unmatched. With the commitment and dedication of our Coca-Cola system partners around the world, I'm confident we are well positioned to deliver on our raised 2026 guidance. This morning, I'll touch on our business performance and share our perspective on the global operating environment. Then, I'll discuss how we are executing against our 3 priorities to enhance our staying power and extend our strength. John will end by discussing our financial results and provide further commentary on the outlook for the rest of the year. We delivered a strong quarter with broad-based momentum across our business. We grew volume 5%, aided by cycling an easier prior year comparison, and we grew organic revenue at the high end of our long-term growth algorithm. Looking at the 2-year average, we grew volume 2%, reflective of a more balanced contribution to the top-line growth. This led to organic revenue growth at the high end of our long-term algorithm. We also expanded margins while continuing to invest in our business, delivered double-digit earnings growth, and gained value share. Our results demonstrate key advantages. Number 1, the strength of our total beverage portfolio. Number 2, the power of our global yet local system. And 3, our ability to quickly adapt to changing consumer needs. Across much of the world, we see an uneven consumer environment. The economy is strong in many places, yet many consumers face inflationary pressures, geopolitical uncertainty, and economic challenges. They are evaluating how they shop, what they value, and what they want to put in their basket. In markets like the US and Europe, the consumer backdrop is stable in aggregate, but many remain under pressure. In China, sentiment remains cautious and spending continues to be selective. Across Latin America, the consumer sentiment is mixed, with improvements in Brazil and Central America, while consumers in other key markets remain under pressure. Across our more than 200 countries and territories, our mission is simple: ensuring our brands are valued, relevant, and worth choosing. To get us there, we are staying close to the consumer, adapting quickly, and doing a little bit better every day to earn every transaction. In the second quarter, our FIFA World Cup integrated marketing campaign and the world-class activation brought consumers closer to the action, showed the power of our system at scale, and drove momentum across our business. In North America, while we benefited from cycling an easier prior year comparison, we delivered strong performance. We gained both value and volume share and grew revenue and profit for the quarter. Our dual approach with FIFA World Cup and America 250 gave us a unique platform to be part of a once-in-a-lifetime celebrations in locally relevant ways across the country. Harnessing our total beverage portfolio, we grew volume 3% by leveraging our growth flywheel. We had strong volume growth for many brands, including trademark Coca-Cola, Fairlife, Powerade, Fresca, Gold Peak, Smartwater, and Simply. During the quarter, newly relaunched Mr. Pibb grew volume more than 20%, demonstrating how we are using insights to innovate and stay relevant across need states and drinking occasions. In Latin America, we gained both value and volume share, realized balanced top-line growth, and grew profit. We continue to navigate a difficult environment in Mexico, but we see improving conditions in Brazil. Our system is taking targeted actions to strengthen the business and build momentum to capture growth opportunities. In EMEA, we gained value and volume share and grew unit case volume in each of the operating units. While we grew revenue, profit declined due to the phasing of investment. In Europe, favorable weather supported volume performance in many markets, while growth broadened across the region. In the region, the Middle East, geopolitical conflicts continue to disrupt the region. We are combining the power of our global scale with the flexibility to adapt to local needs. This led to value share gain and strong volume growth for trademark Coca-Cola, Fuze Tea, and Sprite for the quarter. In Africa, our system is highlighting localness and sharpening our revenue growth management capabilities to drive sustainable long-term growth. Lastly, in Asia Pacific, we grew volume across all operating units in nearly all beverage categories. Comparable operating income declined during the quarter, primarily due to our focus on expanding our consumer base in all socioeconomic segments. While we are encouraged by the progress we've made, we recognize this is a journey. We are investing to bring more consumers into the franchise and build our business for the long term. For example, in China, we are using the strength of our total beverage portfolio, and in India, we are taking our proven revenue growth management capabilities to meet consumer needs. Overall, growth was broad-based across channels and consumption occasions, reflecting our ability to meet consumers with the right offerings at the right moment. To sum up our global view, we remain focused on our all-weather strategy, building balanced, quality top-line growth while being locally agile and executing at pace in this dynamic economic environment. Earlier this year, I laid out our 3 priorities to deliver on our next chapter of growth: becoming even more consumer-centric, remaining constructively discontented, and placing digital at the core of every connection. First, on becoming more consumer-centric, the 2026 FIFA World Cup is a great example of how we are leveraging the 4 I's: insights, innovation, intimacy, and integration to build capabilities for the long term. We entered the tournament with a stronger foundation and greater system alignment, allowing us to bring the activation to life with more speed, precision, and scale. We started with deep insights, understanding fans, occasions, and how consumers want to engage throughout the tournament. We used innovation with connected packaging to make our brands more interactive. Through our long-standing partnership with Panini, we distributed more than 1 billion player stickers across more than 40 markets, driving digital participation and engagement. We've applied intimacy by tailoring activations to local consumers, market by market, team by team. We translated the tournament's momentum into powerful consumer experiences, placing Coca-Cola and Powerade at the heart of national pride and fan celebrations. We've brought it all together through integrated execution across our system in over 180 markets in more than 20 million retail outlets. This execution delivered commercial impact, driving average incidence of over 80% at venues across 16 host cities, which is a record for us for a FIFA World Cup. Throughout the tournament, we've collected more than 25 million first-party data points and generated more than 9 billion views through digital and social media activations. These insights give us a stronger foundation to better understand consumers, tailor our decisions, and improve how we show up in the marketplace. Activating around the FIFA World Cup contributed to trademark Coca-Cola volume growth of 5% for the quarter, its strongest volume growth in 17 years, excluding COVID recovery. Powerade also grew volume 8% globally during the quarter. Moving to remaining constructively discontented, we are focused on driving more from more markets and more from more brands. This quarter's results show that we are making our brands more relevant to more consumers and making our $32 billion brands work harder for us. For example, evening occasions remain a meaningful untapped opportunity. By redesigning Coca-Cola 00, we're better positioning the brand for this moment. Following strong initial success in Europe, we continue expanding the product to more markets globally. Combined with disciplined revenue growth management, strong execution, and world-class bottling partners, we are strengthening our ability to deliver more growth for more markets. As we continue to think about preparing the organization for the next chapter, we are putting great leaders in place, sharpening accountability, and inspiring a culture of doing a little bit better every day. Finally, we're focused on elevating the role of digital across everything we do. We are amplifying the things that we already do well with more agility and more scale. By focusing our resources on a selective set of consumer, customer, and enterprise priorities, we can strengthen our competitive advantages and create more value across the system. In summary, I'm encouraged by the energy and ambition across Coca-Cola system. We are learning faster, acting with greater speed, and uncovering new opportunities to create value. Our priorities are helping us to create a stronger system today while building the foundation for our next chapter. With that, I'll turn the call over to John.
Thank you, Enrique, and good morning, everyone. Our second quarter and first half results demonstrate the strength and consistency of our business model. Given the uneven external environment, we continue to use the many levers available to us to drive long-term growth. For the quarter, organic revenue grew 6% and unit case volume grew 5%. The quarter benefited from several factors, including favorable weather in certain markets, strong global activation around the FIFA World Cup, and cycling an easier prior year comparison. As Enrique mentioned, on a 2-year basis, volume growth is 2%, which is consistent with recent trends. Concentrate sales were 1 point behind unit case sales due to the timing of concentrate shipments. Price mix grew 2%. This was driven by 3 points of pricing actions, partially offset by a point of unfavorable mix, primarily driven by investment timing, notably in Asia Pacific. Comparable gross margin increased approximately 120 basis points, and comparable operating margin increased approximately 90 basis points. Both were driven by underlying expansion and currency tailwinds. Importantly, we expanded margins while continuing to invest behind our brands and executing revenue growth management strategies that provide consumers with the right package, brand, and price point for their occasion. Putting it all together, second quarter comparable earnings per share of 97 cents increased 11%, which included a 2-point benefit from currency tailwinds. Free cash flow was approximately $6.9 billion, an increase versus the prior year. Our balance sheet remains strong with our net debt leverage of 1.4 times EBITDA, which is below our target range of 2 to 2.5 times. Given the momentum of our business and the strength of our balance sheet, we have increased flexibility and optionality to continue to both reinvest in our business and return capital to share owners. With respect to our ongoing dispute with the U.S. Internal Revenue Service, we recently presented oral arguments before the 11th Circuit Court of Appeals. We appreciate the opportunity to present our position and now await the court's decision. Ultimately, our stance is unchanged. We will continue to vigorously defend our overall position and remain confident in our chances of prevailing on appeal. Let me now provide a brief update on Fairlife. Majority of production operations have resumed at our 4 facilities in the U.S., and retail availability has been largely unimpacted. There was no impact to our second quarter results, nor do we anticipate any material impact to our results in the second half. As previously discussed, we anticipate our Webster facility to continue ramping up capacity through the remainder of the year. I want to recognize our Fairlife and Coca-Cola teams for their swift action and dedication. Now let me turn to guidance. While the external environment remains uncertain, Our strong first half performance and business flexibility give us confidence in our updated outlook for the year. Based on our year-to-date results and expectations for the balance of the year, including 6 fewer days in the fourth quarter, we expect to deliver at the high end of our prior revenue guidance with organic revenue growth of approximately 5%. We now expect comparable currency neutral earnings per share growth, excluding acquisitions and divestitures, of 7 to 8%. We continue to monitor commodity volatility, but based on what we know today, we continue to believe the overall impact of our cost basket to be manageable. Divestitures are now expected to be a 2 to 3% headwind to comparable net revenues and an approximate 1% headwind to comparable earnings per share. This assumes the pending sale of Coca-Cola Beverages Africa closes towards the end of the third quarter or during the fourth quarter, subject to regulatory approvals. Based on current rates and our hedge positions, we now expect an approximate 1-point currency tailwind to comparable net revenues and continue to expect an approximate 3-point currency tailwind to comparable earnings per share for the full year 2026. Our underlying effective tax rate for 2026 is still expected to be 19.9%. All in, we now expect comparable earnings per share growth of 9 to 10% versus $3 in 2025. There are some considerations to keep in mind for the remainder of the year. We expect concentrate shipments to lag unit case volume by 1 point during the third quarter and now expect concentrate shipments to slightly trail unit case volume for the full year. We expect fourth quarter gross and operating margin to benefit from the refranchising of CCBA. Finally, as a reminder, due to a calendar shift, the fourth quarter will have 6 fewer days compared to the fourth quarter of 2025. To summarize, we are pleased with our strong first half performance. Our results demonstrate the effectiveness of our strategy and the advantages of our global system. We are focusing on staying close to our consumers and customers to create durable top-line growth and long-term value. As a result, we remain confident in our ability to deliver our updated 2026 guidance and our longer-term financial objectives. With that, operator, we are ready to take questions.
Thank you. Ladies and gentlemen, to ask a question, you'll need to press *1 on your telephone. To withdraw your question, press
I'll give my thoughts
again.
at the end, but it's quite plain to me that this is a profit-taking time with the market selling off, waiting for a dip to carry on.
Our first question comes
looking
from
to buy this back in about October time.
Go ahead, your line is open.
Now, this will be profit-taking.
Thanks so much. Good morning. Just, after such a strong quarter, and, as you pointed out, it's the easiest comparison you have of the year. So I was just thinking, as you look forward into the second half, how you're weighing the consumer environment globally into that outlook, pockets of strength, pockets of weakness, and just curious to hear, a little bit more on that consumer environment thought into the second half. Thanks.
Hey, Lauren, great talking to you. Look, first of all, I think you saw on the numbers that we delivering on what we guided in the beginning of the year, and having not only a great first half, a great quarter, but more importantly, how we got to the numbers and with the dynamic scenario that we have on a consumer basis. We delivered getting more from our markets, getting more from more brands and more categories. And we did that by getting closer to the consumer, right? Being really consumer-centric in a world that we're seeing, a very uneven dynamic scenario these days. The pressure actually on income, socioeconomic level, low income levels continues to be there across, the globe. And we played our RGM toolkit to the fullest during this first half, and it's going to continue to be like that on the second half, addressing not only affordability, but premiumization in a way that we can continue to follow the consumer and to be closer to them. So we see the momentum that we built on those capabilities and the business moving into the second quarter. What changes is that on the second quarter, we cycling a higher comp and 6 less days, but the momentum continues to be there, and we're very happy to see the growth across every operating unit and pretty much about every category showing up during this first half of the year.
Our next question comes from Dara Mohsenian from Morgan Stanley. Please go ahead. Your line is open.
Hi, I was just hoping to get an update on Fairlife. Short term, it sounded like the existing production's returning to normal. You mentioned the incremental capacity at Webster. Can you just confirm, is everything on track in terms of that incremental Webster capacity ramp up, or has that been disrupted at all? I know it's coming online, but more the timing of it. And then B,
what a stupid question. They made it quite clear.
Incremental capacity
a lot of these analysts, they're not interested in the stock. It's their job to ask questions from their investors. Just ridiculous.
Are you
not even
looking
listening.
at greater channel penetration, moving into new areas? Is it more about availability within existing retailers? And also just from a brand standpoint, are you looking at more flavors, packaging options, et cetera? What does it allow you to do from a brand standpoint? Thanks.
Thanks, Dara. Look, let me start with the results of the first quarter on Fairlife that have been great. We grew 18%, and that was also something that we're planning in the beginning of the year with the ramp up of the Webster plant. So the demand continues to be pretty strong, and we were on par with what we had said as well, that it would be a year with increasing availability and continue to be strong moving forward. Related to the incidents, the business is back and running pretty much across every line and plants that we have, and we did not have any impact on the supply on the consumer service during that period. So we continue to see our plan in line for the rest of the year. And as we said as well, the priority right now is to continue to have the main SKUs, the main offerings on shelf, right? Because the demand is still there, and the innovation will come as we have even more flexibility down the line. So that's the latest. We continue to be very excited with the brand. And as John said on the remarks in the beginning, we're also very pleased with the way our team and the ecosystem around it address the incidents in a very diligent way.
Our next question comes from Steve Powers from Deutsche Bank. Please go ahead. Your line is open.
Good morning, everybody. Thank you. Enrique, I wanted to focus on Asia Pacific and India, if I could. You generated significant volume there as you expanded the consumer base, focused on affordability, revenue growth management, as you discussed. But at the same time, there was a bit more investment in price mix than we had expected to generate that volume. And you cited some value share losses in India. So if we step back, could you provide maybe a bit more context on your approach to positioning for long-term growth in that region, where you stand today, and what we should expect going forward as we monitor ongoing progress? Thank you.
Sure, Steve. Look, it is also very consistent with our strategy. The region, it's a long-term opportunity and continues to be very attractive to us, and we continue to build this for the future. Remember that we said in the past as well that this would be, place that we're going to continue to invest ahead of the curve, bringing more consumers to the base in the right way, dialing up our revenue growth management capabilities. And it's a place that we're seeing not only opportunities on the affordability part where we are investing ahead of the curve, but also on the premiumization side as well. We do own in India specifically 7 out of the top 10 brands today, and building the equity of those brands is our primary goal. And it's important that we continue to be focusing on where, to build those capabilities to actually capture even more growth into the future. So that's the reason of that investment and behind it. But if I step back and talk about the PMO in the region, I want to unpack that and tell you exactly what it's composed of, the 9 points. 3 variables there. One was investment timing, 1/3 of it. Another third was of the affordability initiatives that are important for us to bring the consumers to the base in the right way, as I was mentioning, investing on cold drink equipment and the right capabilities to execute these and gain more consumer engagement across that segment. And the other third, it's just the geo mix, because when you have India and China outgrowing, for instance, other developed markets like Australia and Japan and Korea, then you have that geo mix impact in that. And we had a great volume growth, not only in India, but in China as well. Important to say as well that you need to step back and look at the overall global consolidation of the numbers. We said these would be a year that we would have a balanced growth on volume and price mix coming more in tandem. And that's exactly what we're seeing, right? And we should see that not only what we saw in the first half, but also in the second half of the year. And we think that APAC allows us to go and continue to build that region for the future with a right capabilities and the foundations that down the road we're going to be able to also capitalize like we did in markets that are a little bit more developed, like in Latin America these days. Okay.
Our next question comes from Chris Carey from Wells Fargo Securities. Please go ahead. Your line is open.
Hi, good morning, everybody. John, can you just refresh our expectations on potential implications of the tax case? Clearly, the Coca-Cola company sees itself in a good position to make an argument for a favorable outcome. If that were not to happen, can you just give us a sense of the potential implications? And secondly, given that we seem to be getting closer to a potential resolution, do you have any sense of timeline, within a range of when we could expect the decision? And then finally, maybe just a refresh on how you would be thinking about capital allocation should you have a positive outcome. I know that's the topic we've covered, but given we seem to be getting a bit closer.
Can everyone check me? It seems that Robinhood is down. These numbers are incorrect.
Those listening on where we are with the tax
SpaceX, I
case,
believe, is
oral arguments at the end of June, and the timing of a decision from
there's some issues here. Maybe not. Stand by.
Is unknown at this stage. We have talked in the past about that being 6 to 12 months out, and that's about the best I can offer at the moment. Not a whole lot more to add to what our current views are beyond what we argued. We continue to have confidence that we will ultimately prevail. And then on best case, worst case outcomes, best case scenario is we win the case and we will have a recourse to what we've already deposited with the IRS, and the worst case is we have we detail that in our financial disclosures. So at the moment, we've passed through.
Parts of Robinhood are in fact down.
Milestone in June.
The app's working, but the website doesn't seem to be working very well. Certain locations are down on Robinhood.
More context on that when it arises, Chris.
Don't be alarmed if your numbers are incorrect.
We're happy with where we are and look forward to the next milestone.
Our next question comes from Filippo Falorni from Citi. Please go ahead. Your line is open.
Hi, good morning, everyone. Enrique, you talked about the FIFA World Cup being a very successful activation campaign, obviously big events, and you talked about being a contributor to the strong growth for Coca-Cola and Powerade. Can you help us understand how much uplift you saw from the event? And should we think that continued into Q3, given the games, including the final, were in July? Just any sense there? And then bigger picture, longer term, you talked about collecting a lot of first-party data. Can you help us understand how that can help you for future marketing campaign to be as successful for other potential events in the future? Thank you.
Sure, Filippo. Look, we look at the FIFA World Cup execution this year as a clear representation of one of the principles that I have been saying, that we are dialing up on this next chapter of growth, which is it's really about being closer to the consumer under the 4 I's. It's getting the right insights, generating innovation that's linked to that, the intimacy market by market, and the integrated plan that can dial up any of our activities and campaigns or events like the World Cup. And we leverage this time to do a execution that was global at the scale, at the global level, but also generated, market intimacy, different ways of connecting with the consumers in the different markets in a way that was very unique. So the impact of that coming together brought us an opportunity to get, for instance, innovation that was scaled across the world with Panini generating 1 billion stickers that was given away with consumers on our packages all over the world. That is a very unique and innovative way to engage with consumers in different markets. We also collected, to your point, the first-party data, 25 million new accretive first-party data points that will help us to take the learnings from one campaign to the next. And we bring those consumers' experiences, to new campaigns like Coke and Meals or Powerade moments as well, moving ahead in the second half of the year. And that is something that we are going after, right? Being closer to the consumers, engaging with them during the venue, but also taking that into new moments, moving forward. When you talk about the overall result, it definitely helped us, but it helped because we were ready for it. The system really showed up with the execution during the venues. If you had an opportunity to go, like I did in many of these venues, we felt really good about the presence in there. We actually had the highest incidence of beverages in a World Cup ever. We got around 80%, which represents roughly close to 1 drink per attendee at the venues. And we also had a lot of work done during the anticipation for that event, as I was mentioning, with different packaging sizes and formats. So it's difficult to quantify what is the actual impact overall, but the most important thing is how we engage with the consumers and we can bring them along to other campaigns moving forward.
Our next question comes from Rob Ottenstein from Evercore Partners. Please go ahead. Your line is open.
Great. Thank you very much. I was wondering if you could give us any kind of insights into the Marriott contract, which you won after 34 years. Maybe what made this the win possible in your view. My understanding is that the coordination with Monster was perhaps the first time you guys have worked together. Maybe elaborate a little bit on that. The timing of the transition, and to what extent it may help your volume. And thank you very much.
Yeah. Thank you, Robert. Look, we're very happy to have, Marriott back. As I said in one of the interactions before, I think in the past, we lost that right to be with them for not being consumer and customer-centric, and we earned it back because we are consumer and customer-centric like never before. And we cheer a new partner as much as we also cheer the current ones that have been with us all these years. And it's great to actually have an accredited partner that it wasn't there with us, and we believe that our team really showed the ability to work together with them and bring, everything that we're doing all over the world through the powerful brands that we have, the value that we create with our customers today in a very unique way per customer. And one thing that we're getting a lot better lately, it's exactly about bringing the complexity of being a global enterprise with more precision and more personalization with our customers and our consumers daily. And that's why we believe that with them and with the other customers, we are going to continue to amplify that opportunity, and we want to continue to extend these, particularly by customer, on what are the best experiences that our brands, together with their brands, can generate the right experiences and opportunities to engage with their guests moving forward. So that's the overall plan. To your point about bringing Monster and others along, we always go and work with our customers in a way that we want to have our entire portfolio with them. We want it all. And that's always how we approach it. And sometimes it takes time to get to the overall portfolio. Others, there will be different parts of the system or the country being a global business that you're going to have to try and learn from. But here, what we did was, being part of our overall portfolio and our partners on energy, it was something that was extended also as a full opportunity for us, to work together with them. So very excited with that, but more excited about what I said, that we see the system, the bottlers and us, very well focused on being consumer and customer-centric like never before.
Our next question comes from Peter Galbo from Bank of America. Please go ahead. Your line is open.
Hey, good morning, guys. Thanks for taking the question. John, I wanted to pivot the conversation actually to the operating margin performance, not only in the quarter. I think it may have been a record not only for 2Q, but maybe all time for Coke. So, certainly impressive. But just, you're going to get some structural benefit as CCBA kind of moves out. But how do you think about just the opportunity to continue to push the underlying kind of operating margins going forward? Again, you've established, I think, a pattern here of consistently putting up, better margin numbers every quarter. So just how should we think about that, not only for the back half, but maybe over the next 12 to 18 months from here? Thanks very much.
Yeah, thanks for the question. And it's a topic, we've discussed in a number of previous calls. Big area of focus. It's implicit in the long-term algorithm. And we believe, and we've demonstrated, I think, in the last few years, that we have the levers to continue to expand the implied margin in the algorithm. In recent years, we've had a couple of primary drivers in our favor and some that have been headwinds. The structural changes in our overall model, becoming more asset light, has, as you know, been one of the primary drivers. And then both I would argue the quality of our top line, the resilience and adaptability of our supply chain and our ongoing willingness to invest ahead of the curve make a potent combination to be in a position to have confidence in the underlying margin agenda. And that's something that we are focused on. We will continue to be so in the second half of the year and for a long time to come. We've had a headwind, as you know, on the foreign exchange front for a number of years, and thankfully this year it has turned into a tailwind. So we have a little bit of a benefit in that in the quarter year to date, and for the full year. But for the quarters ahead, I think the primary area to judge us on is our ability to continue to drive a quality top line, and from there then to manage both our cost base and our investment base to sustain that over time. And when that happens, the implied margin in our algorithm will come to fruition.
Our next question comes from Peter Grom from UBS. Please go ahead. Your line is open.
Great. Thank you. Good morning, everyone. So I was just hoping to get some perspective on the U.S. North America had another quarter of really strong organic sales growth. And obviously a lot of volatility in the quarter itself, and you mentioned the consumer is broadly stable, but could you provide more detail on just what you're seeing from a consumer and channel perspective? Did you see
thank you, Clipto. That promotes the channel. Thank you so much indeed.
And maybe more importantly, how do you see that evolving from here? Thanks.
Sure, Peter. Look, what we have been seeing is that the consumer continues to participate pretty well on our industry, and the growth represents that, so we were able to capture that. It's important also to remember that we're cycling a easier comp from last year. So I think on the run rate, for North America, we're very pleased with that actually how we got to these results, which is really growing pretty much every category in here. But it's also important to remember the cycling from last year. On the consumer front, what we're seeing is while they remain participating on the industry, the lower income continues to be pressured, and we're seeing that it's really about value, not only pricing. And I think one of the great things that we did in North America here to connect with the consumer was to make sure that our brands were valued, relevant, and at the end of the day, worth choosing by them in the different channels. And we made it easier for the consumer to actually go there and get that worth choosing happening, because we either had around brands that were doing well, different packaging formats that allowed them to have entry prices at the right level. So a great example of that is you got mini cans on multi-packs in the retail stores that are more positioned to convenience and to premium. And then when you go that's on the retail, and then when you go into the convenience store, you have the mini cans as sold as a single at the lowest entry price. So that allows you to play the RGM capabilities really well. Another great activity that we have done during the quarter was to bring innovation to life as part of the overall connectivity with consumers. Mr. Pibb, as you saw, grew 20%, and it's another example of us bringing the 4 I's to life. There was a clear insight that brought the innovation of that brand to come back with a proposition that would have a higher caffeine content and then a more bold cherry flavor. And with that, we're able to get, these results that are really encouraging for us. Another interesting one is that the exportation of ideas and innovations from the U.S. to the world, which is a Sprite in tea That was an innovation that helped us also to get momentum on the Sprite, and now it's exported to Asia. So in a nutshell, we believe that the consumers continue to participate. It's about value, not only pricing. And the way we're positioning our brands and engagement with the consumer here in North America, we believe that we're going to continue to have the right momentum moving forward into the second half as well.
Our next question comes from Andrea Teixeira from JP Morgan. Please go ahead. Your line is open.
Thank you. Good morning. I was hoping if you can talk about the momentum through the quarter as you exited, and also thinking, I understand it's hard to quantify the FIFA effect, but I understand that a lot of the consumption occasions, and you mentioned, Henrique, the 80% was a record on the venues that people would drink, but not only that, as you do the viewing parties and what happens with consumption away from home vis-a-vis at home, and how we should be thinking as we progress the second half, if there is any dislocation we should be aware of in terms of mix, or how we should think about worldwide as consumers also have to go through a higher oil price and at the pump. Thank you.
Okay. Andrea, good talking to you. On the volume growth itself, right on the quarter, first of all, we were very pleased to see that it's, one of the strongest ones in the last few years. And that gives us the confidence that everything that we said in the beginning of the year, that this would be a year that would be more balanced on volume and price mix, is actually happening in the right way. The other point connected to what you're saying on how the consumers are reacting, all over the world these days on not only perception and also disposable income for the industry. We are showing up in the right way, giving them the options on affordability and premiumization, and that was translated as well in the first half, and we believe that we're going to continue to have that being addressed in the second half. It's also important to always remember that while we had this strong volume, the run rate for the last 2 years is 2%, which if you go back to 2017 up to here, it's more or less in line with where we were. But most important thing is that we're getting more for more markets and more for more categories, and then the degrees of freedom to get to that algorithm are amplified. And that was something that deliberately we wanted to have in that. The World Cup, it's one factor into that, but it's not the sole impact of everything that I was describing as the most important underlying capabilities that drove these performances. So we're really focused on durable and balanced top line growth, and that's our focus.
Our next question comes from Kaumil Gajrawala from Jefferies. Please go ahead. Your line is open.
Hey, everybody. Good morning. I want to follow up, Henrique, on what you just mentioned, looking at a decade of revenue growth, and I think you said the degree of contributors to hitting that algorithm give us a lot more freedom or something sort of along those lines. Given what we've observed, not just this quarter, but sort of building over the last couple of quarters, and in terms of the evolution of the portfolio, whether it's getting rid of zombies or whether it's the contribution from some new things and the core, is it fair to say you should be towards the high end of that at a base level, as opposed to sort of looking at the same range of what the last decade has been about?
So, Kaumil, just trying to see if I got the last part of the question right. Is saying about delivering, if it's more about the high end, okay, got it. Look, what we're seeing and I was mentioning is the fact that we're getting the results with more from more markets and more for more categories. It allows us to have a better degrees of freedom. That's how I used, and apologies for my engineering background here, but that allows us to have, better control of how we deliver that durable long-term algorithm. And that's exactly what we're going after, right? To the point that we're making about the volume, you shouldn't look at one quarter only. It's always better to step out and to look at the whole year. And we said that this would be a year that if we did everything right, we would see volume and price mix more in tandem, and that's exactly what we're seeing. So on the first half, because of the extra 6 days, and we have some of the events like the World Cup, the weather, that also helped us, and we captured that because we're ready for it, made that quarter, that first half, a building a momentum that we're going to transfer into the second half with the learnings to continue to take advantage of our campaigns and our plans for the second half. But it's a half that has 6 less days as we planned. So all aligned with what we said at the beginning of the year. We're excited with the volume growth, but there is way better opportunities to continue to get more from more markets and more from more brands moving forward.
Let me just add one additional piece. I just keep in mind the long-term algorithm is a long-term algorithm, and it's rooted in, first of all, what the industry typically grows by. And if you go back 30 years, there's been a handful of anomalous years, but it typically is in the 3 to 4 range. And so that's one key consideration to think about longer term. And then the second one is, as we have worked hard over many, many years now, is to continue to build a differential set of capabilities to win more than our fair share of that growth. And so that lands you in a range which is what our long-term algo says, 4 to 6%. And the ambition clearly is to be at the higher end of that on a sustained basis.
Our last question today will come from Bonnie Herzog from Goldman Sachs. Please go ahead. Your line is open.
All right. Thank you. Good morning, everyone. I just had a quick question on your updated guidance, which does now imply more bottom line leverage for the year. So, maybe just hoping to understand the drivers of this, and should we assume less spending in the second half versus the first half? And then, if you could just touch on your strategy around advertising spend and how that may be evolving given the strength you're seeing in your business and certainly the changes we're seeing with the consumer. Thank you.
Thanks, Bonnie. On the last piece, there's no significant change in strategy with regard to investing to support our brand portfolio and to stay close to the consumer. As we've seen many times, what happens during a quarter is not necessarily reflective of the investments that take place in a quarter. But over the long haul, we're committed to continuing to invest ahead of the curve. That may mean quarter to quarter higher levels than gross margin. Sometimes it'll be lower levels. Number one. Number two, one of the areas that we are very focused on is the quality of the investments and leveraging an increasing set of new capabilities supported by AI and digital to be able to do so. So I think rather than just focus on the quantity of investment, we're very keen for that to deliver a higher return through better quality allocation across the marketing mix. With regard to guidance for the rest of the year, we have this year we have some benefits on below the line, which we're reflecting in that guidance, and we look forward to delivering that in the second half.
Ladies and gentlemen, this concludes our question and answer session. I would now like to turn the call back over to Henrique Braun for any closing remarks.
To close us out, we are really encouraged by our business results and are really confident that we have many levers to deliver on our objectives in 2026 and over the long term. Our performance is driven by our team across the Coca-Cola system, who continue to demonstrate hard work and commitment every day. I want to thank you for your interest, for your investment in our company, and for joining us this morning. Thank you.
Ladies.
Right, stand by. We've got 1.5 minutes before the market opens. We're going to go through the bell for 10 minutes, and then we're going to switch into a major event, a SpaceX expose. I did tell you a week ago the government were buying into SpaceX, and now this morning, for the first time, I can reveal exactly why, who, and where, and why, and all the rest of it. So we've got Coca-Cola. Performed well, great. Not the time to buy, absolutely not. James Quincy, the CEO, and most of the directors sold a few weeks ago. Before me, actually, I'll tell you that now. You all know that. Well documented. I sold after them. I would not be buying it now. It's going up because the market is rotating. I'm out of Coca-Cola. It's running, and we know what happens next. Profit gets taken, and where's it going to go? It will follow the money. I expect to see a big move on SpaceX at any moment. We got 1 minute to go. Coca-Cola is pumping into the open. Let's see where it ends up a week from now. Like the CEO said, Braun, don't look at 1 quarter or a day event. Look at the rest of the year. There's going to be a pullback. There's going to be a sell-off, and there's going to be a massive rally on SpaceX. So that's why I'm in. I'm down now nearly $130,000, right, on a 1.1 million. I'm okay with that, because I know who's buying, I know where the money's going. Here we go, and then we'll switch over to our big SpaceX event coming up in a minute. It's where the money goes next, not where the money is running now. Here we go in 4, 3, 2, 1. Let's go. The bell has gone. We are off to the races. I'm down $130,000, 1.1 million in Coca-Cola, and in SpaceX. I beg your pardon. And there comes the sell-off for Coca-Cola. People dumping right on the bell as expected. Let's go through and show you my position. It's a big one. It's massive. Let me show you the overall portfolio. Here we go. 682,000 plus my Roth, plus my ISA, plus my brokerage in Robinhood UK. 1.1 million invested across all those platforms. Just on my main account, 680. So I'm down 130,000 across my entire 4 accounts. Let's grow. Let's see what happens this morning. So here we go. We're seeing my portfolio down 30 grand today, $130,000 now across my portfolio. All right. The S&P is coming down as well. A crash, a pullback is coming. Virgin Galactic is tanking. We sold this. We got out of it, as you all know. I warned it would go a lot lower now on the back of SpaceX. As you can see, exactly like I predicted, there's Coca-Cola being sold off like a penny stock. There it goes, right back down, right on cue. I did warn you. I did tell you this was going to happen. So let's get straight to it. SpaceX is picking up the money. There it is. Come on, everybody. Martyn was right. You know where the money's going next. And this morning, I'm going to share with you the government members who are buying it. And now I can give you all their names and details. I will share it with you this morning. Palantir is going down. Gold is going down. I don't buy hedges. Amazon is flat today. Apple is going down. Now, Enphase Energy, it's going down prior to the earnings? Enphase Energy earnings tonight. We are covering it live. Join us tonight for the Enphase Energy earnings. Now we've got Coca-Cola selling off. Bit of rebouncing again. Be careful. I wouldn't be buying it here today. If I thought it was a good idea, I would sell the SpaceX for a loss and chase it. But I'm not doing that. I know where the money goes next. Chevron oil going up. Still issues with oil. Still issues in Iran. Tesla going down because SpaceX are going to own them. Tesla could go to $80. That's what SpaceX want. McDonald's is up but pulling back. Google is slightly up today. Microsoft up 1.3. We've got Meta up today, 0.7. Nvidia going down. Everyone criticised me when I sold my Nvidia at 220. Apparently I was stupid. Well, I said it was going down and here we are at 195. Am I buying at 195? Absolutely not. I'm all in, one stock, 100% committed conviction of SpaceX because that's where the government money's going. It's where the money already is. Walmart is up today. It's too expensive. Tilray brand is up today because of what Coca-Cola was saying. That's why that's gone up. It relates to the same thing, a discretionary, a staple. People buy Coca-Cola, they buy Walmart, and then they sell both. As simple as that. Tilray brand's got no value whatsoever. Robinhood's going down today. I told you it's too expensive. Who the hell paid $120 for this? Vertical Aerospace going down on the back of SpaceX. So is Joby Aviation. So is Archer Aviation. Taiwan Semiconductors has been bleeding for the last few days. And Bitcoin, we sold it again at the top. Everyone, well, not everyone, but a lot of people criticized me for selling. We sold at the top like 6 months ago. We bought the bottom. We made some money. We got out of crypto. It's not the time. I sold my crypto. I sold my XRP at 115. We're now at 105. There you go. Can go to 80 cents. Ethereum, we sold that as well. And I sold my Solana. So there you go. There is the rundown of the day. Now we're going to go into our special this morning. It's a... Whoopsie-daisy. Why am I... That's right. Okay. I'm now going to share with you a SpaceX special. So I've given everyone the link. It's pinned to the top. Let me just drop it in there as well. We're going to go there right now. It's a SpaceX special. If you are on a brokerage or if you use any of those social platforms like Webull, eToro, Trading 212, you might want to share this video. I think it's going to be very, very good news for SpaceX. We had one yesterday blow up on Reddit and one blow up on Trading 212. People were sharing it and commenting. It was incredible. This one, I'm sure, will be even bigger than the last one. What am I talking about? Well, I'll show you on the screen where we go next. This is what we're talking about. I've been telling people about the government buying. Now I can share it with you. Here we go. This is government buying. SpaceX. I was right about Coca-Cola. I'm right about SpaceX. I know it's going down and it hurts. Trust me, it hurts to be down nearly $140,000 now, but it's 1.1 million. Expect to be down hundreds of thousands. I could be down $250,000 before it's all over, but when it goes up, and boy, will it go up fast, I'll probably $2.5 to $3 million. So, you know, at the end of the day, what do you want to do? All right, chase the money or buy when everyone's selling. Well, real investors do the hard work, and that's what this channel is all about. Right, okay, folks, it's now time to go over to that event. I've given you the link. It'll switch you right there. If you click on it, I'll be right there. And let's get straight into it. Let's go, and I'll share with you all those government officials who are lining up to buy and have already bought, which I told you about a week ago. All right, that's it from me. I'll see you right there in a couple of moments. It's a SpaceX special. Get ready to post this on your Trading 212s, eToros, Weebulls, different places around the world, your Reddit channels, because this one is going viral because this is the information I predicted and told you was going to happen, and I knew, and now we've got the evidence to show you. See you right there in just a couple of moments. Take care of yourselves and each other.